Well, remember I-bonds? Well, they got super popular in 2021 and 2022 when sky-high inflation shot the annualized rate to 7.12% in November of 2021 and a record 9.62% in May of 2022. Well, if you bought in at those highs, it may be time to sell now. Our very own Kerry Hannon is here with why. So, Kerry, talk about this changing landscape here.
Well, it's terrific to be here. And yes, it is changing. Now, here's the deal. I-bonds are still a really super safe investment. But when you got in those, when it was all the rage about 2 years ago, and they're paying those high rates, remember, there's nothing else really out there paying this kind of return and yield for investors, especially savers. And so it was a great deal. But what's happened is as inflation has come down, so has the rate on these bonds. And this is how it works. I-bonds are comprised of two things. You have a fixed rate, and then you have a variable rate that adjusts every 6 months. And so what has happened is as the inflation rate has come down, the variable rate has come down, and the fixed rate back then was zero. So if you owned those bonds and you bought them at 9.62% back in May of 2022, that's now paying out something like 3.9%. So that's about a third of what you were getting at the beginning. So it really is time to take a look and think about if we think as the rates may continue to tick down a bit more, if the Fed starts, cutting rates, then we're going to see some further decline in this. And so you might want to look elsewhere. Now, I-bonds are super great in many ways. And right now, as of November, they're paying 5.27%. And what that is a combination of a fixed rate of 3.9, a fixed rate of 1.3%, which is a really nice fixed rate moving forward, and that variable rate that we mentioned that the old holders of these I-bonds from 2 years ago are now getting. So, it just might be time to take a look and maybe see where can you put that money that might give you a little more pop.
So then, Kerry, for people who are taking those gains then, where should they put their money next? Should they put them back into these bonds?
Yeah, I think, a lot of the experts I talked to about this said, why not? It might be a great time to redeem and reinvest back in at this new, at the new rate that's paying through the end of April. And the good news here is you have that fixed rate now. So for the life of your bond, it's going to be that new fixed rate, whereas the life of the bond, the old bonds was the same. So I say you might do that. The other thing experts say, and I agree, there's some great deals out there on CDs that you can lock in 1-year CDs or laddered CDs that are over 5.5%. This isn't a bad return at all, and you have some security there. So those are two good ways, a high yield money market fund as well. But again, or savings accounts. But I would take a look at maybe if you love the I-bond because you have that inflation protection, you have this security of being backed by the U.S. government, and when you do redeem them, you don't have for the most part local or state taxes, and you might not even have federal tax on that because if you reinvest for higher education costs. So there's some really good things about the I-bond, but again, there are some other things out there today that were not there when people bought those back in 2022.
Certainly important not to just leave everything on autopilot and see some of these changes and perhaps some more optimal places to invest. Appreciate you as always, our very own Kerry Hannon.